Across the board, as you know, in this final stretch, Dow, S&P, NASDAQ all heading towards record closes, and that after a lighter than expected April inflation print. Let's bring in Warren Pies of 314 Research. Good to see you again. Welcome back.
Thanks for having me.
How impressive is this move to you in this market?
Oh, man, it's pretty impressive. We tried to do a tactical underweight for equities back coming into Q2. And after watching Powell's press conference, we rolled that back and got back market weight. And so we were pretty bullish coming into the year and, saw potential for this. But still, it's impressive to watch it happen. Market clearly wants to go higher.
Yeah. Well, so what does it really mean, though, for where we can go from here? It's kind of the question I asked at the very top of our program. How likely is it that this is the, beginning of the next leg? You tell me.
Yeah, I think it's hard to be underweight stocks when the Fed is easing, which they are. I think the aggressive taper of QT is an ease. And when you don't see a recession, we look at the economy from a number of different angles, and we don't see a recession. So with those two factors, I think you have to stay market weight at the very least with the stocks here. But I'm a little skeptical of how this summer is going to play out. And that's really back to the inflation data. I think that the Fed and the market is assuming there are factors in that data, specifically shelter, that are going to roll over as we get through the year. And when you really dig into the details and look at the housing market and what's happening coming off the back of the big rally in stocks and falling yields, I don't expect that. I don't think that the markets, the Fed's going to get their inflation target because of shelter. And so I think that's the one area where the market has it wrong. And that's what I would expect to be the stumbling block. But we can definitely go higher before that.
Then you would think that the chair himself has it wrong, because he sort of underscored recently, too, that he thinks it's so much of a lagging indicator that it's going to be coming down and will become more favorable and will help inflation get back towards target. Yeah,
it makes me really uncomfortable to disagree with the Fed chairman, and that is exactly what he said. And he explained the mechanics of shelter inflation and why it lags really well at his last press conference. The only thing that gives me really reassurance that our work is actually correct is he said almost the same thing verbatim 12 months before that last meeting when he testified in front of Congress in June of 2023. So he has been wrong in the past, and I think he's going to continue to be wrong. And I think the market's taking its cue from him. So you really need to get into the data and roll your sleeves up and do your own work.
Well, does that mean when you hear a price target like BMO's Belsky today of 5,600, you're skeptical of that, or do you think that's achievable?
Well, you never say never, given the background what I just laid out, but I am skeptical. That wouldn't be my base case. And if you remember when I came on with you last December, we said we thought the market would be at 5,200 come May. And back then, I think that the skepticism was on us. And one of the things that I kept bringing up to you is I expected to see strategists up their targets and chase this market as we came into the year. I thought that everyone was underweight, actually, more underweight than it felt at the time. And this is part of that scenario playing out to me, is seeing these targets go up well above the market's current level is kind of what you see at the end stage of a rally. So I am skeptical. I'm going to try and be open-minded at the same time and not try to stand in front of the freight train of a bull market. Mm-hmm. But I'm certainly skeptical. And those are kind of contrarian bearish indicators when you see just raise their targets.
You said that's not my base case. What is your base case? What seems like a more reasonable return, let's say, over the next 6 months to you?
Yeah, I think that we're going to have, I think we're going to be basically flat to down over the next 6 months. That would be my base case. I think that bonds are overvalued, stocks are overvalued. And I don't know what the sequence of those returns is going to be, but I feel pretty confident that we're not going to, when we go back to the end of this year and we look out at 2025 and everything that this market's priced into it, I'm pretty confident that we're not going to be at that 5,600 level on the S&P. So, yeah, I think that we're pretty much priced to perfection. In the near term, could we keep going to 54, 5,500? Sure. But when you go out 6 months, this is one thing I wrote to our clients. Perception is reality in the market for now, in the short term, but over the long term, reality is reality. So when does that reality hit? I think by the end of the year, it will be here.